Ladies and gentlemen, welcome to the NHPC Ltd Q4 FY’25 earning conference call hosted by Elara Capital. As a reminder, all participant line will be in listen-only mode and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Rupesh Sankhe from Elara Capital. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of Elara Securities, we welcome you all for the Q4 FY’25 conference call of NHPC. I take this opportunity to welcome the management of NHPC, represented by Mr. R.K. Chaudhary, Chairman and Managing Director, Mr. R.P. Goyal, sir, Director Finance, and Mr. Uttam Lal, Director Personnel. So we will begin the call with a brief overview by the management, followed by Q&A session. I will now hand over the call to Mr. R.K. Chaudhary, sir, for his opening remarks. Over to you, sir.
Okay, thank you very much. Good afternoon, friends. The NHPC board has adopted annual financial results for the period ended 31st March 25 in its 492nd meeting held on 20th May 25, and the same has already been communicated to the exchanges. By now, I hope you all would have got chance to go through the quarterly and yearly set of numbers. First, I will just touch upon major highlights and then detailed analysis of the results shall be discussed by our Director Finance, Sri R.P. Goyal ji. Brief highlights of the financial results and important date updates on the company are as under. During financial year 25, our power stations have achieved generation of 19,862 million units, as against 21,773 million units generated in corresponding period of the previous year, which is lower by about 9% or 1,911 million units. This is mainly due to heavy flash flood in Teesta Basin in October 23, which has resulted into complete shutdown of Teesta 5 power station, which had generated 1,966 million units in the corresponding previous year. We have already shared that restoration works at the power station suffered due to a landslide in August 24, affecting the tail race tunnel outlet structure and part of the GIS building. Now, restoration works are progressing well and are expected to be completed by January 26. Our plant availability factor for financial year 25 stands at 73.94%. The corresponding previous period plant availability factor of 77.60%, which is about 4% lower. This is mainly due to lower water availability, complete shutdown of Teesta 5 power station, and outages of units at TLDP 3 Uri 1 power station. During financial year 25, company has earned revenue from operation of rupees 8,994 crore, as against rupees 8,397 crore in the corresponding previous year, which is about 7% higher. During financial year 25, company has earned PAT of rupees 3,084 crore as against rupees 3,722 crore of corresponding previous period, which is about 17% lower. On physical front, I am very pleased to share that all the 4 units of Parvati 2 hydroelectric project 800 megawatt have become commercially operational, with 3 units from 1st April 25 and 4th unit from 16th April 25. This achievement is particularly significant as it comes after surmounting numerous geological and technical challenges throughout the project cycle. The completion of this ambitious project marks a major step towards securing India's energy future by adding hydro capacity of 800 megawatt in RE portfolio of our country and reaffirms NHPC's leadership in the hydropower sector. The project has become NHPC's largest operational hydropower station as of now. Further, NHPC has also commissioned 107 megawatt out of the 300 megawatt solar power plant in Bikaner, Rajasthan, under CPSU scheme on 12th April 25, which is an important step in our ongoing efforts to diversify into other renewable energy sources. In respect of Suvansi Lower Hydroelectric Project, 2000 megawatt, the balance construction work at site is going on in full swing. Overall, 96% physical progress of the project has been achieved. Dry commissioning of Unit 1 and 2 has already been completed, and pre-commissioning activities of Unit 3 is in progress. A team constituted by National Dam Safety Authority (NDSA) has visited the project site to review the initial filling plan of the reservoir. The commissioning of 3 units is expected very shortly. We are very hopeful of commissioning 5 units of the project in the current financial year and rest of the units by May 26. The anticipated cost of the project is rupees 26,076 crore, and we have incurred rupees 23,753 crore till March 25. In respect of Dibang Multipurpose Project, 2,880 megawatt, 5 out of the 7 contract packages have already been awarded. The remaining 2 contract packages related to dam and HM works for intake and draft tube gates are in evaluation process. We have already shared that we have achieved the crucial Nala diversion, a significant stride towards ensuring all-weather road access to the project site. The estimated cost of the project is rupees 31,876 crore, which includes grant of rupees 6,716 crore for flood moderation and enabling infrastructure works, out of which we have already incurred rupees 3,183 crore till March 25. Further, estimated levelized tariff of the project is rupees 4.46 per unit, and the scheduled completion of the project is February 32. In respect of Lanco Tista Hydropower Limited, LTHPL's Tista 6 hydroelectric project 500 megawatt, we are pleased to share that process of merger of the company with NHPC has been completed, and now the project is part of NHPC on a stand-alone basis. The work is progressing well at site. Overall, 66% physical progress of the project has been achieved. The estimated cost of the project is rupees 8,449 crore, out of which we have already incurred expenditure of rupees 4,142 crore till March 25. The expected commissioning schedule of the project is December 27. Jal Power Corporation Limited, JPCL's Rangit 4 hydroelectric project 120 megawatt is also progressing well. Overall, 86% physical progress of the project has been achieved. We have already shared that in July 24, the project has successfully achieved the daylighting of the HRT. Unit 1 has been boxed up and boxing up of Unit 2 is in progress. We have successfully lowered the rotor of Unit 3, the last unit of the project. The project is expected to be commissioned by December 25. The estimated cost of the project is rupees 1,828 crore, out of which we have already incurred expenditure of rupees 1,432 crore till March 25. Further, we are in the process of merger of JPCL with NHPC, and first motion application has been filed with Ministry of Corporate Affairs. In respect of Rathle hydroelectric project 850 megawatt in UT of J&K, the work is progressing well at the project site. Overall, 21% physical progress of the project has been achieved. The estimated cost of the project is rupees 5,282 crore, and we have incurred expenditure of rupees 916 crore till March 25. Estimated levelized tariff of the project is rupees 3.92 per unit, and the project is expected to be commissioned by November 28. Presently, NHPC through its subsidiary Chenab Valley Power Project Limited is executing 3 projects in Chenab Basin in UT of J&K. Construction work at Pakaldul hydroelectric project 1000 megawatt is progressing well. Overall, 67% physical progress of the project has been achieved. The estimated cost of the project is rupees 12,728 crore, out of which we have incurred expenditure of rupees 6,265 crore till March 25. The project is expected to be commissioned by September 26. In respect of Kiru HE project, 624 megawatt, overall 58% physical progress of the project has been achieved. We have incurred expenditure of rupees 2,478 crore till March 25. Out of the estimated cost of the project of rupees 5,409 crore. Estimated levelized tariff of the project is rupees 5.68 per unit, and estimated commissioning of the project is September 26. In respect of Kwar hydroelectric project 540 megawatt, the work is progressing at site. Overall, 20% physical progress of the project has been achieved. The estimated cost of the project is rupees 4,526 crore, out of which we have incurred expenditure of rupees 1,008 crore till March 25. Estimated levelized tariff of the project is rupees 4.44 per unit, and the project is scheduled to be commissioned by December 27. Apart from the above under construction projects, NHPC is also actively pursuing to start works of projects such as Uri 1 Stage 2, 240 megawatt, Dulhasti Stage 2, 260 megawatt, Sawalkot 1856 megawatt, Kirthai 2 820 megawatt, and Tista 4 520 megawatt, which are at different stages of clearances. In respect of our hydroelectric projects in Nepal, final detailed project reports of West Seti Hydroelectric Project 800 megawatt and SR6 Hydroelectric Project 460 megawatt were submitted to the Investment Board of Nepal on 18th October 24 and 12th March 25 respectively, adhering to the timeline specified in the MOU signed between IBN and NHPC. Currently, DPRs are under approval by IBN. For the Phuket Karnali project 624 megawatt, NHPC has submitted the DPR review report in March 24 as per the agreed timelines. Notably, strategic discussions have been initiated for joint ventures and power purchase agreements, and the development model includes both domestic supply and cross-border electricity export, aligning with regional energy security goals. PPAs for all the under construction projects of NHPC, including its subsidiaries, have been signed or consent has been received from the DISCOMs for the same. In respect of 1000 megawatt capacity solar power projects allotted under CPSU scheme Tranche 2, we have already shared that we have commissioned 107 megawatt out of 300 megawatt project in Bikaner, Rajasthan, and the full commissioning is expected by August 25. Further, sub-lease deed of land has been executed in respect of 600 megawatt projects in Gujarat, and design and engineering activities are under progress. Further, land acquisition and erection works are in progress in respect of 100 megawatt project, solar project in Andhra Pradesh. NHPC has awarded the EPC contract for 200 megawatt grid connected solar power projects stage 3 located in 600 megawatt solar park at Khavra, Gujarat on 23rd December 24. The cost of the project is rupees 822 crore and tariff of the project is rupees 2.66 per unit. The project is expected to be commissioned by March 26. The works of another 200 megawatt grid connected solar power projects located in 600 megawatt solar park at Khavra, Gujarat stage 1 was awarded on 5th August 2024. Site survey works and geotechnical investigations have been completed. NHPC is also exploring to develop pumped storage projects in the state of Andhra Pradesh, Odisha, Madhya Pradesh, Chhattisgarh, Gujarat, Tripura, Punjab, Rajasthan, and Maharashtra. The DPR for Indra Sagar Omkareshwar pumped storage project 640 megawatt in Madhya Pradesh, Savitri PSP 2400 megawatt in Maharashtra, Yaganti PSP 1000 megawatt and Gadikota PSP 1200 megawatt in Andhra Pradesh, Mashinta PSP 1000 megawatt in Odisha, and Kuppa PSP 900 megawatt in Gujarat is under preparation. PFR of Kengadi PSP 600 megawatt, Kalu PSP 1350 megawatt situated in Maharashtra, and Longtharai PSP 800 megawatt situated in Tripura have been submitted. Further, PFR of Raju Pelam PSP 800 megawatt, Arveti Palli PSP 1320 megawatt and Dinepalli PSP 750 megawatt in Andhra Pradesh have been prepared. For other projects, preparation of PFR is in progress. Friends, this is all from my side. Now I request Director Finance, Sri R.P. Goyalji, to discuss financial results in detail.
Good afternoon, friends. I am going to share with you detailed quarterly and yearly set of numbers with the detailed analysis. The NHPC Board has adopted annual financial results for the period ended 31st March 25 in its meeting held on 20th May 25, and the same has already been communicated to exchanges. Brief highlights of the financial results and important updates on the company are as under. During FY'25, our power stations have achieved generation of 19,862 million units as against 21,773 million units generated in corresponding period of previous year, which is lower by about 9% or 1,911 million units. During fourth quarter FY'25, our power stations have achieved generation of 2,170 million units as against 2,304 million units generated in corresponding period of the previous year, which is lower by about 6% or 134 million units. Our PF for FY'25 stands at 73.94% against the corresponding previous period PF of 77.60%, which is about 4% lower. Our PF for fourth quarter of FY'25 stands at 58.59% against the corresponding previous period PF of 54.65%, which is about 4% higher. During FY'25, revenue from operation of the company has gone up by rupees 598 crore from rupees 8,396 crore to 8,994 crore, which is about 7% higher. The increase in revenue is mainly due to increase in sales pertaining to previous years by rupees 742 crore on account of pay anomaly orders and impact of annual fixed charges revision, and increase in unbilled revenue by rupees 540 crore mainly on account of interest on arbitration cases, Vivad se Vishwas cases and amount deposited in Niti Aayog by the company, which is further offset by lower energy charges by rupees 262 crore and decrease in interest from beneficiaries on account of truing up for 2014-19 tariff period and tariff order for 2019-24 period by rupees 372 crore. During quarter 4 of FY'25, revenue from operations of the company has gone up by rupees 410 crore from rupees 1,649 crore to rupees 2,059 crore, which is about 25% higher. This increase is mainly due to reversal of water sales by rupees 337 crore in Q4 of previous year. Water sales in respect of Himachal Pradesh and Sikkim was reversed in view of outcome of the Honorable High Court of Himachal Pradesh against imposition of water sales and increase in capacity charges by rupees 83 crore. During FY'25, other income has come down by rupees 21 crore from 1,600 crore to rupees 1,579 crore, which is about 1% lower, showing marginal decrease. During Q4 FY'25, other income has come down by rupees 191 crore from rupees 588 crore to rupees 397 crore, which is about 32% lower. This is mainly due to decrease in dividend income by rupees 96 crore and decrease in exchange rate variation gain by rupees 57 crore. During FY'25, the generation expenses have come down by rupees 18 crore from rupees 814 crore to rupees 796 crore on account of lower water sales due to lower generation of electricity. During Q4 FY'25, the generation expenses have gone up by rupees 344 crore from negative rupees 247 crore in corresponding previous quarter to positive rupees 97 crore in current quarter. The increase is mainly due to the reason that during Q4 of previous year we had reversed the water cess in respect to Himachal Pradesh and Sikkim, and consequently there was a booking of negative rupees 355 crore against the water cess in respect of Himachal Pradesh and Sikkim during that period. During FY'25, the employee benefit expenses have gone up by rupees 354 crore from rupees 1,290 crore to 1,644 crore, which is mainly due to provision of pay anomaly arrears in compliance of the Honorable High Court of Punjab and Haryana. During Q4 FY'25, the employee benefit expenses has come down from rupees 368 crore to 367 crore, which is almost flat. During FY'25, there has been increase in the finance cost by rupees 421 crore from rupees 726 crore to 1,147 crore, which is mainly due to increase in interest on arbitration and court cases by rupees 432 crore, against which unbilled revenue of rupees 406 crore has also been recognized. So net impact of this item is only 26 crore on the profit and loss account. During Q4 FY'25, there has been decrease in the finance cost by rupees 379 crore from rupees 349 crore to negative rupees 30 crore, which is mainly due to increase in interest on arbitration and court cases by rupees 183 crore and reversal of 110 crore towards interest on arbitration and court cases, which has now been capitalized in current quarter. During FY'25, the depreciation and amortization expenses have gone up by rupees 14 crore from 1,111 crore to 1,125 crore, which is also flat. During Q4 FY'25, the depreciation and amortization expenses have gone up by rupees 13 crore from rupees 280 crore to rupees 293 crore. During FY'25, other expenses have come down by rupees 13 crore from rupees 2015 crore to 2002 crore, which is almost flat. During Q4 FY'25, other expenses have gone up by rupees 144 crore from rupees 534 crore to rupees 678 crore, which is mainly due to increase in insurance expenses by rupees 101 crore and increase in R&M expenses by 39 crore. During FY'25, tax expenses have gone up by rupees 365 crore from rupees 552 crore to rupees 916 crore. This is mainly due to reason that during corresponding previous year period, MAT credit of rupees 529 crore was recognized. During this period, no MAT credit has been recognized, whereas MAT credit of rupees 271 crore has been utilized. During Q4 FY'25, tax expenses have come down by rupees 241 crore from rupees 424 crore to rupees 183 crore. This is mainly due to the lower utilization of MAT credit. During FY'25, we have earned PAT, profit after tax, of rupees 3,084 crore as against 3,722 crore in corresponding previous period, which is down by rupees 638 crore and which is around 17% lower. And the reason for increase in the line items we have just discussed. During Q4 FY'25, we have earned PAT of rupees 894 crore as against 693 crore of corresponding previous period, which is up by rupees 201 crore or 29% approach. The reasons and for increase in the line items we have just discussed. During FY'25, the incentive position is as follows. We have earned secondary energy to the tune of rupees 123 crore in current financial year FY'24-25 as against 102 crore in the corresponding previous period. So there is increase of 21 crore in the secondary energy. PF-based incentive we have earned in FY'24-25 to the tune of 227 crore as against 316 crore in the corresponding previous year. So this is down by 89 crore. Deviation charges we have earned 35 crore in FY'24-25 as against 41 crore in the corresponding previous year. So this is lower by 6 crore. So a total of all the three incentive we earned in FY'24-25 is 385 crore as against 459 crore in the corresponding previous year. So we have lose around 74 crore on account of these three incentives during the FY'24-25. The incentive position during Q4 of FY'25 is as follows. Secondary energy we have earned 81 crore as against 80 crore in the corresponding previous quarter. PF-based incentive is 207 crore against 252 crore in the corresponding previous quarter. And deviation charges is 5 crore as against 7 crore in the corresponding previous quarter. So total of all the three incentives during the Q4 of FY'25 is 293 crore as against 339 crore in the corresponding previous quarter. Capex of rupees 11,596 crore has been incurred during FY'25 against target capex of rupees 11,762 crore for FY'25 on consolidated basis. The Board of Directors has recommended the payment of final dividend at the rate of 5.10%, that is 51 paisa per equity share, in addition to interim dividend at the rate of 14%, that is 1 rupee 40 paisa per equity share, resulting in total dividend at the rate of 19.10%, that is 1 rupee 91 paisa per equity share on the face value of paid up equity shares of rupees 10 each for the financial year 24-25. Other major highlights of the company are as under on realization front. NHPC has received rupees 8,349 crore from the beneficiaries against sale of energy during FY'25 as compared to rupees 9,606 crore in the corresponding period of the previous year. Trade receivables as on 31st March 25 stands at rupees 4,412 crore as against 3,978 crore as on 31st March 24. This includes 3,677 crore as unbilled debtors as on 31st March 25 as against 2,263 crore as on 31st March 24. The net receivables out of total reported trade receivables are reconciled as under. The reported trade receivables are rupees 4,412 crore. If we subtract unbilled debtors from this, the unbilled debtors are 3,677 crore. So billed receivables works out to rupees 735 crore. If you exclude the debtors dues converted to installments under electricity late payment surcharge and other orders of CRC, that is 119 crore. The net amount due from the beneficiary works out to 616 crore only, and dues more than 45 days is only 220 crore. So overdue amount is only 222 crore in our case as on 31st March 25. Unbilled debtors mainly include unbilled annual fixed charges and recoverable as per CRC regulations, including security and insurance expenses of 1,366 crore, interest on arbitration of the court cases of 580 crore, impact of effective tax rate on return on equity of rupees 485 crore, unbilled sales for the month of March 25 of rupees 480 crore, and shortfall in generation to regions beyond the control of the company of rupees 292 crores. The net billed trade receivables as on 19th May 25 stands at rupees 740 crore, which includes more than 45 days use of rupees 73 crore only. This is all from my side. Now the forum is open for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. My first question is on the profitability. Last year, I think we did 36 billion of profit on Concall basis. It has declined to 30 billion, 3,000 crore. You did touch upon on the various one-offs, but can you please help us with in border basis what explains the decline? Is there a one-off in the tax item? You did say that there is a MAT credit, but is it related to the past period which is on the tax, which you can just help us explain?
Yeah, Mohit. So you'll have to understand that, the major reason for decline so let us discuss at PBT level first. So if you look at PBT level, you will find that the decline of 100 crore in quarterly number and 200 crore in yearly number. Right?
Right.
So quarterly number 100 crore is entirely on account of reversal of 110 crore on account of interest on arbitration, which has been reversed in Q4 itself, and that is the reason you will see that there is a negative finance cost of 30 crore.
Mm-hmm. Right.
So that is the only one-off. You can treat this item as one-off, and if you add back this 100 crore number as a one-off, you will arrive at the actual adjusted PAT, PBT I mean. Okay.
Mm-hmm.
A similar kind of adjustment if you do at the yearly number, like 200 crore decline in PBT, you will, if you refer note number 5 and note number 6 of our financial result, you will find that there is impact of 100 crore in pay anomaly, which has impacted our PBT, and 26 crore again that this interest on arbitration. So 126 crore impact is there on account of these two numbers, and 100 crore decline is there in energy charges. So almost 200 crore decline is there.
Understood. That's very helpful.
So that is two adjustments you have to carry out to arrive at the adjusted PAT.
Understood.
Anything else you want to understand?
No. That's very helpful. Can you please help us with the NHPC revenue and profit numbers for the fiscal?
Please come again.
NHPC, the subsidiary revenues and profits.
NHPC, yeah.
Yeah.
So NHPC, just a moment, I will share the number. Yeah, so total generation of NHPC during the current FY was 5,575 million units as against 4,473 million units in corresponding previous year. Right? The revenue from operation is 1,400 crore as against 1,270 crore. The PAT is 837 crore as against 812 crore.
Understood. My one last question, sir. Can you please help us with the capitalization of Parvati 2 in the books? And related clarification is that how are you going to book the revenues? Will it be 85% of the expected capacity charge till the time we get the full tariff order from the CRC? Is that right understanding?
Actually, our Park 2 has been capitalized, 3 units has been capitalized from April 25, and 4th unit has been will be capitalized from 15th of April 25. So full year generation and full year revenue will be there, and we are in the process of filing tariff petition in the CRC. So based on filing of tariff petition, we will recognize 90% of the revenue on provisional basis till the order comes from CRC.
Understood, sir. And what is the amount capitalized, sir? Amount capitalized on the book?
Amount capitalized will be around 12,000 crore plus.
Understood, sir. Thank you, and all the best, sir. Thank you.
Thank you. Next question is from the line of Ragini Pandey from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity. I wanted to know that what was the impact of insurance cover, which was not there at Teesta 5 now. I mean, the insurance cover was till September 2024, I think, so last year. So what was the under recovery in Teesta 5?
Yeah, Ragini, if you look at the normal circumstances of Teesta 5, TLDP 3 and TLDP 4, all these three projects in Teesta Basin, you will find that in normal circumstances, almost 300 crore kind of PBT we earn from Teesta 5, 100 crore from TLDP 4 and 103 crore from TLDP 3. So almost 500 crore kind of PBT we earn from these three projects. But due to this flash flood we have discussed, the last previous number was 300 crore. But this year number is 99 crore loss. So there is almost 400 crore kind of, a loss at PBT level from these three projects.
Okay, thank you. I just wanted to confirm on the adjusted PAT number for Q4 FY'25. So you said that there is an adjustment of 200 crores in Q4, right?
Q4 100 crore adjustment you have to carry out on account of reversal of interest on arbitration. 200 number is for yearly number.
Understood. Okay. What will be the incremental revenue from the recently commissioned Parvati project?
Yeah, so the design energy of Parvati is 3,074 million units, and the expected tariff is around 7.5 to 8 rupees. We have to, file the tariff petition with CRC, and we have to wait for the final outcome. But approximate number, if you want to consider, at the rate of 7.5 rupees, 87% sellable design energy of 3,074 you can consider, and that will work out somewhere, 2,000 crore.
Okay, yeah. Sir, another question was on Subansiri. What is the expected commissioning timeline for the project and the incremental revenue which is expected from it?
As per our plan, we will commission 3 units by June 25, and rest of 5 units will be commissioned one by May 26. And the incremental revenue of this project will be in the range of 4,000 crore.
Okay.
On annual basis. Incremental revenue will be 4,000 crore on 4,500 crore on annual basis when full commissioning is achieved.
Yeah. Okay. Thank you. This was my last question. What is the regulated equity currently after the commissioning of Parvati project?
Yeah. So console level, if you want to consider, 13,000 crore is regulated equity for NHPC as standalone, and 1,000 crore is regulated equity in NHPC. So our share is 14,000 crore as of now. Considering 13,000 crore capital cost of Parvati 2, you can consider 30% of the capital cost as a regulated equity. So it works out to around 4,000 crore. So roughly 14,000 plus 4,000, 18,000 crore would be regulated equity in this particular financial year.
Okay, thank you. Thank you.
Thank you. Next question is from the line of Prashant Shirsagar from Unweaved Corporate Research Private Limited. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, please.
Yeah. I just wanted to know the progress of other projects in the Subansiri Basin, especially the Middle Subansiri, Upper Subansiri, if you can share.
Subansiri Middle, that is Kamala Hydroelectric Project, it is 1720 megawatt. So
Hello.
Hello, are you listening?
Yeah. The line got.
So again I will repeat.
Yeah.
The Kamala, that is Subansiri Middle project. So it is 1720 megawatt. Pre-DPR chapter already cleared by the CA and CWC. We have submitted the cost chapters, and it is likely to be cleared by the CA and CWC very soon. So techno-economic clearance we are going to get very soon, and at the same time we have processed for the environmental clearance and forest clearance also. So things are moving very fast. We are expecting that during this year the all clearances will be there, and before that we will move for investment approval, PIB and CCA, because these projects Kamala and Subansiri Upper is 1605 megawatt. That is also going well. Clearances are progressing. So in these projects there will be 26% share of the state government and 74% NHPC. So for these two projects, the PIB and investment approval we have to obtain from the Government of India. So we are expecting that by the year end, the NHPC will move for investment approval from the Government of India. Thank you.
So you said the share of state government will be 26% in both the projects, or only Upper Subansiri?
No, in the Kamala also and Subansiri Upper also, the Government of India has approved that any project in Arunachal Pradesh which is allocated to different public sector undertakings, NHPC, SJVN, TSDC and NIPCO. In all those projects, there will be share of the state government utilities, maximum up to 26%.
In the JV company.
In the JV company, yeah.
In the JV company. Okay. And sir, about the Dibang project, you said you awarded 5 phases, 5 tenders or whatever.
Yes.
The technical terms, exact technical term I will not be knowing. But the balance, when do you expect it to be awarded?
You understand that the entire project, the civil works, hydromechanical works and electromechanical works. So these all 3 types of works. So we have formulated 7 packages, 7 contract packages. Out of 7, 5 contract packages have already been awarded and works are progressing at site. The rest 2 packages, the tender is opened and it is under evaluation. So we expect that shortly we are going to award the balance 2 contract package. Okay.
Sir, about the middle and Upper Subansiri, has the land acquisition been completed, or it has started, or complete? At what stage it is?
Land acquisition has also started. So the district administration has already issued Section 4 and then Section 6. So they have already moved for the acquisition of land for both the projects.
Both the projects. Okay.
Yeah.
So that answers my question. Thank you.
Thank you. Thank you.
Thank you. Next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hello. Yeah. Thanks for the opportunity once again. So my question was, are you expecting more projects due to the abolition of the Indus Water treaties? Has there been any further conversation around it?
The Indus Water Treaty is not abolished. It is kept under suspension. In this scenario, yes, you are right that now there is a lot of emphasis, and we are going to start the Uri 1 stage 2, 240 megawatt, and we have already floated the mechanical and electromechanical works. We are going to float the tender during this month only. The second project, Dulhasti, stage 1, 390 megawatt already there. So there is a Dulhasti stage 2 project, 260 megawatt. So for that also, we have received the approval, concurrence appraisal from the Central Electricity Authority today itself. And now we are going to float the tender during this month end for the civil works. The third project, 1856 megawatt Sawalkot project. So for that project also, the approvals are going in the very fast mode, and we are expecting that very soon we are going to float the tender for the Sawalkot also. At the same time, the possibilities are being explored to start some more projects like Kirthai 2 and some more projects in Indus River, in Leh, Ladakh area. So these are the things under the change scenario. Okay.
Understood, sir. Sir, are you looking to award the projects under one single EPC umbrella, or are you going ahead with taking the packages? Because I remember I saw one even large Sawalkot order based on EPC basis, but I think you've broken the package again. Is that right understanding?
Sawalkot project, we are going to formulate the entire works of the project in two package for the civil works, one package for the design and engineering, and again hydromechanical works and electromechanical works. So we have already prepared the bid document for the two package, and we are waiting the investment approval from the government. So then we'll go ahead.
And is there any comment on any PSC projects which you think you'll award in F'26 or F'27 in the near term?
Yeah. So the first project we are going to award the Indra Sagar Omkareshwar, that is 640 megawatt. So the project, the DPR is under evaluation in the CWC and Central Electricity Authority. We are expecting that within next 2-3 months, we are going to get the DPR cleared. And once the DPR is cleared, appraisal is cleared, then we'll move ahead with the award of works.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to management for closing comments.
Yeah, Rupesh, thanks a lot for conducting this conference call post result, and thank you all participants for your interest and time. Thank you so much.
Very good.
Thank you. On behalf of Elara Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.